So the first thing I want to do is start at the top of the list and work our way down so you guys can see why certain pairs did not make the watch list today. I'm going to fly through this. If you know the ASFX language, this is going to be very clear for you. If you're still learning or you're not in ASFX, try to follow along. And if you want to learn more, go to my YouTube channel after this video and go watch the Forex terms video. If you sort my videos by most popular, it'll come up at the top. That'll teach you a lot of the little terminology that we use to identify what's happening on the chart. So first thing, again, at CAD-JPY, I'm always looking at the TDI first. If you're taking notes, if you want real value from this stream today, write this down. First thing we're looking at is the TDI. Where is market sentiment? Where is this yellow line going? Here, it starts in the buy zone. We're looking at start from the period separator right here, this vertical line. That's the changeover of day from yesterday, Monday, into today, Tuesday. So from the changeover of day, the market sentiment line starts in the buy zone and ends up falling down into what we would call reset at that stationary 50 value. And then it ends up dropping even lower into the sell zone before pulling back up into the buy zone. So here, with a swapping market sentiment line like this, instantly it's not going to make my watch list because what that yellow line, if I blow it up, what this swapping from buy zone into sell zone tells me is that there's indecision between the buyers and the sellers. Now, will we still trade swapping L50s, still trade swapping market sentiment lines? Absolutely, but it's not my top priority. Instead, what we're going to do is go look to see if we can find a better trade. So let's go to CHF-JPY. Here, instantly I'm looking at price action and I hate it. Why? Because it's inside the Asian high set here and the Asia low set here. It's trading in between those two levels, trading in a range, which aligns very much with what this pair typically does in the New York and in the London sessions. Because it's a JPY pair, normally this is going to make its move here in the Asian session. Because it didn't, or maybe this is all the move it's got for the day, it hasn't broken out of that range since. So why would we come in and try to trade within that range that's already been set? If we can get out of the range, then we would look for trades. But until then, not doing anything with it. On top of that, look at the market sentiment line. It's also swapping. Now let's take a look at Euro USD. Euro USD was pretty sideways yesterday. As you can see, it really didn't move much after it set the low at the London session and the high at the London session. It just traded in between. It didn't break out really. Today, it finally, about an hour ago, broke out to the downside past that level that was our bottom at yesterday's London low right here. Finally breaking out past the 1.155 level. So now, with us seeing price action continue to make lower highs and lower lows, you can see here, we go lower here, we're going lower here compared to here. Since we're making lower highs and lower lows, we're going to be short biased. EMAs tell us to be short biased. Price action structure tells us to be short biased. But if you look at the market sentiment line, it starts in the sell zone, which aligns with the short bias, and then rises into the buy zone. So that's like counterintuitive to what the price action is actually telling us. So to me, this is unreadable right now. I'm going to look for something cleaner with a better market sentiment line, but we're getting closer. So let's keep looking. Euro JPY, similar to CHF JPY, a little sideways this morning. It is making higher highs and higher lows, as you can see, as it's now broken out of the Asian range, coming off the 50 EMA. The market sentiment line is falling into reset, but it is in the buy zone all day today. It does not break below that 50 value. So it is telling us that buyers are in control. If you look at yesterday's move, even Friday's move, it's clearly bullish. And we've seen a lot of strength behind JPY pairs over the last couple of days. Even if you go real quick, look at GJ. We'll talk about this. Look at GJ yesterday through ADR, 170 pips. A lot of quote JPY pairs picked up a lot of momentum. Yesterday, Euro JPY, normally it moves 80 pips. Yesterday, it moved 154, almost double ADR yesterday. So today, you would, of course, want to keep the long bias. I would not want to be looking for shorts. When we see the perfect market sentiment line and we see price action at the 50 EMA, we could be looking for a D1 entry. So if we pull this up on the 1 minute, Simon says, do you mind looking at the D1 on Euro JPY? Absolutely, Simon. We're right here right now. So here you can see if we go to the 1 minute, which is what we do for the D1 entry, and we look for bullish divergence. Here you have the rising RSI. Here you have the falling price action. That's bullish divergence. That sets us up for the D1. And I can see right here as it comes down through the 50 EMA, then coming back up through the blue 50 EMA, the light blue line right here, that gives us the higher low off the divergence with the market sentiment line in the buy zone. Now, according to our back testing, according to what the D1 entry says, that's where you can look for your entry. I'm giving you guys so much sauce today because we haven't streamed in a while. That's where you look for your entry, and your stop would go at the most recent higher low. would not be this structure here. I would use the divergence bottom because that's just as close, and it's only 7.6 pips away. Now, with that, you would read risk reward to at least the high a day, 2.7 R, right here it tells you that, to the high a day, set right here, and it actually goes through that, giving you a nice almost 4R trade. You're risking about 8 pips, it goes about 28. That's a pretty good trade here. And it's pain free. Notice how from when you take the entry, market sentiment line has been holding the buy zone the entire move. Now, Simon and anybody else that's in this trade, as that market sentiment line starts to come back down into the sell zone, this is where I would definitely have my stop loss locked, which you should because it's over 3R. None of our systems say to not have your stop locked when it moved that far. And here, even if it does come back down, you can have the stop locked and you can still make sure you don't lose any money on this trade. And if the market sentiment line wants to hold the buy zone, you'll still be able to take advantage of the move if it wants to continue to hold the 8 EMA here on the 15-minute. So this is a nice little D1 entry. This will get marked up into the back testing. And as you can see, it comes off the 15-minute 50 EMA. And if you look at where the entry is, because you waited for that pullback on the 1 minute, it comes after the 8 EMA gets above the red 21 EMA. And that's what's very important. You don't want to try to buy it when the 8 EMA is below the red 21 EMA on the 15-minute, as it is right here. So now, with the 8 being above the 21 on this pullback, you know that this next bar should hold the 8 EMA. So you can have a tight stop loss, because if this came back down, you wouldn't want it. So it's very, very pain-free. It's very, very clear. If you know how to read the divergence, like Simon, like Randy, this is what you guys are seeing. Tika was watching this too. Yep. This is where I would look for the entry, guys. And you guys know that from the D1 deep dive. Randy and Tika, you guys were just here in Tampa with me. We talked about this. So I think you guys are spot on. You found the good market sentiment. You found the good price action structure. It's out of the Asian range. You found everything that fit the bill here. And then you came to the 1 minute and found the risk reward. I think this is nice. Very well done. Let's go over to Euro GBP and keep moving through the watch list. So Euro GBP this morning, kind of ugly. It's maxed out ADR. Market sentiment was bullish overnight, and then it just tanked. As the GBP pairs pulled up, it pulled Euro GBP down pretty hard. So now, with this today, maxed out ADR, swapping market sentiment line, not on the watch list. Go next. Euro NZD, maxed out ADR. See how it touched both lines? And look at the market sentiment line. Indecisive. Sell zone into buy zone into sell zone. Very indecisive. Not interested in trading that today. So that's not on the watch list. EuroCAD. I like EuroCAD. You guys know this is one of my favorite pairs. EuroCAD broke out to the downside, breaking past yesterday's low, kind of slowing down at that same price level from yesterday's low. So I would stay short biased here today as price is breaking out pretty hard. But look at the market sentiment line. It's in the buy zone. So again, swapping market sentiment, not on the list. See how it's not flagged here on the right side? Not on the list. Euro AUD, same thing. Maxed out ADR, swapping market sentiment line. Sell zone, buy zone, sell zone. So we're not doing anything with that. GBP AUD. Now we're going to get into something here. Another D1 entry, very, very similar. A little bit cleaner, but you've got bullish divergence in your way. So the market sentiment line today, from the start of the day, as you can see, says to be looking for shorts. If we connect yesterday's RSI low to today's RSI low, up until 1:30 this morning, you can see price action falling and the RSI rising. So there's bullish divergence in the way of the short trade you're looking to get in here. Now, some people would look at this as a potential 3-candle formation, like an A1. I would not, just because it is pretty big. That's the overextended bar for the day. This is the biggest body of the day. So I'm not a big fan of that. But as you wait for this to pull back on the 1 minute, you actually have what looks like a D1 in here as well, because it's got bearish divergence inside this 3-candle formation. See how the RSI is falling, price is rising? What does it do? Retests the 50 EMA in the next bar, and that's where you then have the market sentiment line in the sell zone. So an opposite of what we were just looking at on Euro JPY. And what does it do? It falls pain-free as that market sentiment line pulls down into the sell zone on the 1 minute. Price action holds the 8 EMA, and it falls so far about 60 pips, risking 18. It's about 3.3 R. The divergence line is the big knock here. That's the biggest thing in your way. On top of that, it's still in the Asian range. So you're trading in the Asian range with divergence in your way. Not a high probability trade, but I wanted you to see there's actually bearish divergence inside this 3-candle formation. So instead of trading the 3-candle formation that's overextended, wait for the 1 minute pullback and use this bearish divergence to continue to trade it as a D1. Now that the divergence line has been broken by the RSI and price action, the divergence is broken. Yes, Tika. Do you consider the divergence broken? Yes. Now that price is under it, we're retesting it here. I think this would be a great place to look for more shorts as it's coming off the 50 EMA. Notice here, where's the 8 and 21 EMA at the time of the entry? 8 is under the 21. It shifted down back here, so it's a great place to be looking for shorts because the short-term shift is already in your direction. You see that? That's why I have this marked up. Not a high probability trade, but it's there. GBP CHF overnight looked beautiful for shorts up until this morning. Now it's maxed out ADR and completely reversed. You can see it coming off the 50 EMA here with the perfect market sentiment line. EMAs are bearish. Yesterday it moved lower through the London and New York session. So naturally, coming off the 50 EMA here, looking for shorts makes sense. Jerome was able to go down on the 1 minute, I believe, and he was able to find an entry. I'll show you right here. He was able to get in right here as it moved and shifted. Let's blow this up. On the 15 minute. His stop loss was about 7 or 8 pips. And as you can see from that A1 shift candle, see how the body is coming off the 21, RSI value is good. There's no 1 minute divergence, so it's not a D1, it's just an A1. It's beautiful, honestly, because a lot of times shift candles will pull back. This breaks the Asian range, comes back into the range, shifts down, crosses with a good RSI value, and then this thing sends itself lower. 3.5R. That's a great trade. Now, it completely reverses and comes back up to stop you out and profit. That's fine. You're able to still make money to the downside here. So that's what I think Jerome was looking at on GBP CHF. That's a nice trade. GBP CAD did not make the watch list today. As you can see, market sentiment line is bearish. Price, however, looks very choppy. It broke out to the downside and then pulled all the way back up to the high a day. It looks a little choppy for me. And if you zoom out to yesterday's low, you can see this whole level of support here has been very, very tough to break at 1.696. That's the level that we would want to be trading short, only if we were underneath that level, I should say. We would only want to trade short if we were under that level. So now that we're above it, not my favorite place to be looking for shorts. That's why it's not on the list yet. GBP JPY, swapping market sentiment line. It's already been extended off the 8 EMA today. It's bullish here, but the market sentiment line spent more time in the sell zone here. So this is indecisive to me. That's why this is not on the list. GBP NZD, choppy. EMAs are not clean yet. Market sentiment is good for shorts, but all morning it's been pulling up back towards the 200 EMA. It's now crossed the 8 and 21 EMAs back up. You'd have to trade through the 8, through the 50, through the 21. This is tough. This is not something that I would want to trade. That's why this is not on the list. We'll come back to GU in a second. That's James's trade. USD JPY did not make the list again today. It maxed out its average daily range at 8 o'clock this morning. Market sentiment is also swapping. Two things right there that I don't like about this. I have better trades on the list to watch. USD CHF, swapping market sentiment right here, drops into the sell zone. But look at the price action. Maxed out ADR. ADR is only 41 pips right now. It's very slow. So just not on the list. These two USD pairs are not normally on my list. And now with US 30, we're about to come into the open here in about 4 minutes. We're going to come back to this after we talk about James's trade. I would expect this to probably continue up. We're in an upshift. 8 is above the 21 EMA. Futures are looking positive. We're normally not going to see so many down days in a row on the Dow. If you look, this is the Dow. See how many days we've had red days? And if you're actually looking at it according to SPY, just because that's a different index, SPY had another $3 down day yesterday, which is pretty significant. So now post-market, you can see, or pre-market, you can see we're up SPY. I know the futures for the Dow are up. I don't think it'll show on here. But DJI is the same thing as the US 30. SPX, SPY, they're just a different index. So on the daily, doesn't look super bullish. However, we know how stocks are. I think stocks and the market as a whole could probably rebound here today. So we're going to watch. I'm not trading US 30 today. I'm not trading anything right now. I'm flat today. But as we get closer to the open, I would be surprised if this just tanked. I think that this will probably see a bounce here to the upside, maybe towards the 34.75 level, towards this ADR level. And now let's go back to GBP USD because I know that this is what everybody wants to see. So here, this is James's idea this morning. Notice he's trading it short after it shifts down. So it shifts down right here, 8 and 21 EMAs cross down. That's what he's first looking for to then be able to take it short. He's not getting in here on this big bar. He's waiting for the pullback. He's getting in here as it hits the 8 EMA, and he's looking to trade it down towards this divergence line. This divergence line was set back here from the RSI low yesterday to the RSI low today so far. You can see RSI there is rising. On price action, though, it's falling. So what he does is he'll wait. Now that he has the short bias because of the market sentiment line and because of the move yesterday, he's short biased. It's coming off the 50. He'll wait for the shift 8 and 21 EMAs to cross down. As it pulls back on the 1 minute, that's where he's taking his entry. I'll show you here. Using this bearish divergence on the 1 minute to give him his D1 structure. He trades it kind of like the A1 and D1 put together, which is why he's calling it the J1. And he's going to probably have something to share with you guys on that very soon. So if you look, you've got the bearish divergence like a D1. You don't have to get in up here. If you were to get in short here, even though the market sentiment line is in the sell zone, you're actually getting in short before it shifts down. This is the 15-minute downshift. So he's waiting for that. And then as it breaks up through the 50 and then back down through it right here with the market sentiment line in the sell zone, that's where he's looking to take the trade because he knows that if it continues higher, he doesn't want it. But if the market sentiment line holds the sell zone, this will drop for him. And that's exactly what it did. 2.4R, something like that. Yeah, 2.46R. He caught a great little trade, took profit. He said at like 2.3R was his best exit, and then he got stopped out in profit as it turned around on him. Now, it turns around because it bounced off this divergence line, but he's still able to make money trading short to the divergence line. So don't let divergence completely talk you out of the trade. Just size down for it if everything else is good. There's nothing else wrong with this. This broke out of the Asian range. The EMAs could be better for sure, but the only issue in my opinion is that you're trading towards the divergence line. That's it. It's very similar if you look at GBP AUD, trading towards the divergence line, and look at this one. This one tanked through it. He didn't know what GU would do. He was just trading good entry signals, and that's why I wanted to share it with you guys. If this had tanked through, he'd still be in the trade. So it's important to just have rules that give you good entries, but also to have rules that give you good risk management, good trade management. And that's kind of like one of the things that I really pride myself on with what we've built at ASFX, because if you take our courses, you're not just getting information on where to get in or how to get out. Most people don't even talk to you about getting out of the trade, which is the most important part. But I think the crucial thing is taking profits and mitigating risk along the way. Taking profits as it moves in your favor, and then moving your stop loss so you don't let a winning trade become a losing trade. I'm actually working on a webinar, a free webinar I'm going to do next week. It's going to be called The 7 Deadly Trading Sins That Most Traders Make. I figured it kind of goes along with the Halloween shit going on at the end of the month. Spooky season. So the webinar is going to be focused on all the mistakes that traders make. I've grouped it into 7 things, so it's easy to remember. And one of them is not booking profits as trades move in your direction. Too many traders will leave their full trade on to go hit their take profit, even if they're 10 pips off of it, because they need that extra 10 pips. And to me, that's not proper trading. If you look at Peter Brandt, if you look at any of the market wizards in the Market Wizards book, Mark Minaveri, Steenbarger, none of these guys would ever let you do that. Proper trading is taking profits. Unrealized gains are not gains. Taking profits to actually make gains, and then mitigating the risk by moving the stop loss. And then let the trade do whatever it wants to do. If it wants to run for 2 days, you can still be in that trade. Just piece yourself out of it. You don't need to hold it with full size. Because if you have a system, you'll be able to duplicate that. And if you do that over and over and over again, you're just hitting your foul shots, hitting your singles. And that's the way that I think you can build yourself to be as close to consistent as possible. Consistent is a tough word when you talk about successful trading, because we're never really 100% consistent. We're always changing. Change is the only constant. But I still think that will push us closer towards consistency. So that's the overview of today. And now we're going to take a look at US 30 to see how it opens now that the stock market